What's up, Nathan? Welcome to the Live Lounge.
Hi,
How are you doing today?
I'm great. Thank you.
Hey, I am really glad that you are here. And let me just give everyone a recap. First of all, thank you for joining us. I am Tamara Nzunza with Realty One Group Capital in Alexandria, Virginia. And joining me today is my good friend and lender partner, Nathan Birch with Vellum Mortgage. Nathan, introduce yourself and tell the people who you are.
I mean, you already did it, but you took the steam out for me. I'm Nathan Birch with Vellum Mortgage. I've been in the mortgage business for 24 years.
Yep. And you're good at what you do.
I try. Thank you.
Yes. So let me just give a little bit of background. I attended a couple of days ago, I attended a local homebuyer education class, and one of the buyers who was in attendance had this heartbreaking story that she shared. She had recently, to kind of sum it up, she had recently gone under contract. She lost her contract because her lender that she chose was unable to close her loan. And in losing her contract, she also lost her earnest money deposit. And Nathan, just hearing her story, my heart was just breaking. And so I decided that it would be a good idea to let people know, give people some ideas on 5 things to get ready, to get mortgage ready specifically for fall. So what do you think about that?
Sure. It's absolutely terrifying. Someone would lose their earnest money deposit. I can't
Yes.
imagine. I've never experienced that. I've never had a client lose money before.
Yeah. And, home prices in Northern Virginia, they're not cheap. And the market is very competitive. So you and I both know that in order to get an offer accepted, you need a competitive offer, which includes a competitive earnest money deposit. Now, I won't say the amount that she lost, but it was significant. And now she's in the process of looking at rentals again because she doesn't have that cash saved for her down payment and closing costs.
Terrible. I just experienced it 2 weeks ago. As a matter of fact, I closed a client who went with a buddy who worked for a credit union,
Mhm.
not a bigger credit union, one of the local guys. And the day before closing, they were told that they were not approved for their loan, which is just crazy again. I mean, imagine the
The
moving
day
truck
before closing?
the day before. So I took that loan. That was a Thursday. They were supposed to close on Friday. This person was self-employed, they were a stock trader. They worked for, oh God, they worked for this big company that was a fund. They worked for a fund as a trader.
Mhm.
And literally, tax returns were crazy. They were very hard tax returns. I had their loan completely done on Thursday night. I called the listing agent. I'm like, hey, listen, I need some time. The loan's basically done. I would already run it by my underwriting manager to make sure this was an emergency. Obviously, we didn't want them to lose their money also. And
Mhm.
so basically I had the loan done the night before. It was a little tough, but we had it done the night before it's supposed to close, within a few hours. And just because of
Wow.
federal law, I had to have a timing period where I had to wait from disclosure till I could close. So
Right.
I ended up closing the following Friday. So I
Mhm.
was 7 days, that bar was 7 days late closing, but I turned it around in a week.
That's awesome. And
Yeah.
it's a huge impact, because when you're under contract and you're that close to closing, you are you have your movers, you have utilities turned on, you're filling out change of address forms. And so it is extremely stressful to get that call and say, hey, I'm sorry, but we can't close your loan.
I can't imagine. There was another one I did a few months ago where same thing, borrower actually lost their $15,000 earnest money deposit.
Hmm.
And I just I
Yeah.
can't even fathom what that is like. It's just never happened before. But, they lost their money. I turned it around and they ended up finding another house. They changed agents who they were working with and
Mhm.
obviously went from me instead of the other lender. This lender happened to be not a lender, but a broker.
Mhm.
And we got their loan done. It was actually a very easy loan. So I don't know what happened, but they failed and we got it done and they moved into their house and they were ecstatic.
Awesome. So, well, let's go ahead and get into these five things. So, number one, to get mortgage ready for the fall, check your credit. Okay. So, Nathan, why does the lender need to know my credit score?
That's the only way to accurately determine if you qualify. First of all, we need to see all of the liabilities. And so there's really a few things that impact your ability to be improved. And that would be your debt to income ratios, which is the percentage of your total debt, including the new housing payment, as a percentage of your pre-tax income. That affects the rate sometimes, but it also affects mortgage insurance. So that's really important. And then we want to look at student loans. We want to look at any late payments and stuff like that. I can't tell you the number of times people have told me their credit score and it's lower. Which leads to the next thing about people think that someone pulling credit actually impacts their credit and lowers the score. And it doesn't. You know, what most consumers see, unfortunately, is credit-wise, which may be on a bank statement or on a credit card statement, or
Mhm,
they're looking at Credit Karma. And those are great tools, by the way. I subscribe to Credit Karma. I
mhm.
look at it all the time, but they use very consumer specific, consumer friendly credit scores. So our scores, there are about 35 different credit scoring models, by the way. The scores for the mortgage industry in particular, we're the only ones who use these credit models for each bureau, Equifax, Experian, and TransUnion.
Okay.
Some of the consumer ones, ours go up to 850. Some of the consumer ones say they go up to 950. So I have people tell me I have an 860 score, I have an 890 score. Not possible. So when I pull scores, I tell my clients what they are, of course, and we use the median. So we pull three bureaus. So we use the median score, and there are some differences between the three.
Mhm.
And that may be a little far off than the bureaus they're seeing and the credit models they're seeing. So that's the difference that people see. It's not that me pulling their credit has impacted their credit. As a matter of fact, it only is about 1 point or so, and it
Mhm.
goes away very quickly. Typically, that impact is gone within 30 days.
Awesome.
Yeah.
Okay. And what is a good credit score to have if I'm looking at buying a house?
If you want to be a good consumer and you want all of your credit available to you to be as cheap as possible, you should have a 760 credit score or higher.
Okay.
Um, it really just comes down to education. I think Credit Karma is actually pretty good at this on getting people to coach to where they want to be. Again, they're not the real scores that we use, but
Mhm.
it shows the impact. There's free stuff on all of the bureaus that talks about impacts of credit score and stuff like that.
Mhm.
But with that being said, I have done FHA loans in the 580, 590 scores with, some money down. If you have a 600 credit score or higher, if you do have a 600 credit score, I can do an FHA loan with
Mhm.
3.5% down. And believe it or not, the rate is not that bad compared to someone who has a really great credit score. FHA is 680 or above in my company, by the way. But conventional loans, that's a Fannie Mae or a Freddie Mac loan, and
Mhm.
what people consider to be the best loans, you typically want on the first time home buyer programs, it bounces a little bit, 740 to 760 credit score or higher is
Okay.
typically where it makes sense before you would roll off and go to an FHA loan.
Okay. Good
And
to
I think
know.
the FHA loans, by the way, get a little bit of a bad rap that,
Yeah.
they have the mortgage insurance built in, it's there forever. But when you look at the rates, especially when you go down below a 740 credit score, can be much less expensive than a conventional loan,
Okay.
even with that insurance there forever.
Okay. Good to know. And here's another question that I frequently get. I want to buy a house, but I don't want my credit pulled. What do you say
I
to
mean,
that?
it's impossible, honestly. If there are people who will give you quotes, I won't do that, actually. I
Okay.
just think it sets someone up for failure. It sets me up for failure, and I think it also sets the buyer up for failure.
It does.
You really don't have an accurate representation of what the true costs are going to be,
Right.
especially someone like that most likely has read some stuff on the internet and they're first time home buyers and not familiar with the process. So
Mhm.
in turn, they also don't have a lot down, most likely. They probably don't have 20% down. And mortgage insurance is very closely associated with credit score. 700 to a 719, 720 to a 739, and also
Mhm.
debt to income ratios.
Okay.
Those are impossible to calculate accurately without having a full credit report, that's done.
Okay. Well, thank you. So so checking the credit is item number one, and that is extremely important.
Yeah, I
Okay.
will tell you that I start with the soft pull credit report, which only pulls 2 bureaus. I
Mhm.
think it's Experian that doesn't do a soft pull. That's because they love to sell your information, by the way.
Ooh.
Um, all of the credit bureaus sell your information. So if I pull a hard credit pull, which I need to do as part of the transaction, um, down the line, I have all of my clients opt out. And that website is optoutprescreen.com. It's a website that the government made the credit bureaus set up to remove themselves to be sold, take them off the list to be sold. So I have all of my clients, I pull a soft pull, I have them remove themselves. Believe it or not, it takes 5 business days for you to come off that database. They can sell your information in 30 seconds. I'm not kidding. Literally, my clients have had received a call within 2 minutes, but
Oh,
the
wow.
credit bureau says it takes a long time to remove them. Total,
Okay.
it's not true. They just want to sell your information. So
Okay.
they've
And we'll be
removed
sure
them.
to, yeah, we'll be sure to put that in the comments, that link.
Yeah, remove yourself, and then we go and do a soft pull and put everything together.
Awesome. Okay. So step number two, or item number two for getting mortgage ready for the fall, gather your documents. So Nathan, exactly what documents are needed to apply for a loan?
Most loan officers are going to tell you it's 222, 2 W-2s, last 2 paycheck stubs, and your last 2 bank statements. I'll tell you, I don't do that. I start with an application. I talk to my clients and we discuss the strategy, how much they want to buy, what they're comfortable purchasing. And really, it starts off with what are they comfortable paying per month total
Okay.
cash outlay. And then we back into what they can qualify for. The reason why I don't ask for those things up front is the mortgage experience has changed somewhat dramatically over the past few years.
Yes.
There's an ability to be able to pull your income and employment records electronically, and also your assets. So I like to do that whenever possible. So income and employment works around 70% of the time if you're a W-2 employee. And
Mhm.
then assets work about 90 to 95% of the time. So I've had literally first-time home buyers who I've done their loan. I start with an application. We do their assets electronically, which takes a couple minutes, and I pull their income and employment electronically. And literally before they've gone out to shop for a home, their loan is done, completely done. All of that data is read by the underwriting engines. It costs money, which is why many lenders don't do it, or they just don't understand how it works and how beneficial it is. We do it
Mhm.
on everything. And so I had a first-time home buyer, bought a condo. Literally all she had to do after we went under contract was shop for home insurance. And she couldn't believe it. She had heard horror stories about her friends who sent documents in multiple times and didn't understand
Yeah.
what they were getting. And it
Yep.
went to the last minute. We were done. We did her loan in 2 weeks.
And what about if I'm self-employed?
Self-employed is a little different. You can't get around tax returns. You need
Yep.
2 years
A
of
lot of
tax returns.
self-employed people in the DMV.
Yeah, we do tons of self-employed people. It's 2 years of tax returns. On conventional loans, sometimes you can get away with 1 year, the last year, if you've been in that business for more than 5 years. So we get 2 years of tax returns. We, behind the scenes, do a lot of calculations to calculate the income. For example, a lot of my clients have not finished their 2023 taxes yet. We need 2021, 2022, and then proof that they filed an extension. And there's some other stuff behind the scenes, like we would need a profit and loss statement and a
Mhm.
balance sheet. For small people, I help them produce that makes sense for their business.
Awesome. Okay. Item number three, getting mortgage ready for the fall. Confirm your dates. So what dates are we talking about? If you are renting, when does your lease end? Understanding what the penalty is for breaking your lease. And can I time my closing to coincide with my lease ending so I'm not making 2 payments? So Nathan, when you're working with people, buyers who are renters, talk about the importance of knowing what your dates are in this process.
Well, I think a lot of people, most people do understand when their lease ends. Sometimes they have to be prodded to actually understand if there are any penalties to leave early because
Right.
maybe they found something they love. But many people don't understand that when you close in the relation to when your first mortgage payment is. So
Right.
I tell people all the time how to back into date. So if someone is moving in December, I mean, we're in September right now.
Mhm.
Now is the time to start doing that, even January. So if you figure you want to be relaxed, I mean, I do loans in an hour or two, but if you want to be relaxed, it's 30 days to kind of start looking and get your bearings what the market's doing. And then you go out and you look around and then you have a 30-day close. So let's say you end up right now and you start looking around, you close in October. If you
Mhm.
closed in the very beginning of October, your first payment isn't due until December 1. If
Right.
you close the very beginning of November, it's due January 1. So it gives some time. We can move very fast also. I close many, it's very competitive in our area.
It
So
is.
I
Yeah.
close a lot in 2 weeks. As a matter of fact, I'd say 60 to 70% of all of my loans are closed in 2 weeks.
Yeah, and that's important to know because if you find when you find a house and you're ready to put in an offer, you will be competing with other buyers who can close quickly. And if you're starting your search process too early and you don't have the means to afford, the mortgage payment and the rent payment, then we need to adjust the strategy.
Yeah,
So,
it's a discussion, it's a planning
right,
session. I think the important thing to really understand also is that it's competitive. So
very,
we want to have your loan done ahead of time.
right.
So, and that's how we win. So you and I work together a lot, and we know that, you submit an offer. Hey, Nathan, the offer's been submitted. I pick up the phone and I call the listing agent, and I want the listing agent to know, by the way, also do a pre-approval letter the day that you submit the offer, because I want it to look, I want the listing agent to know, it's not just some pre-approval letter you got 3 weeks ago and you're going through your email like, who's that guy we talked to?
Right.
I want them to know that I have a relationship with your client and that this is something that's been done right. It's fresh and it's not just something that was done before. And then I call the listing agent. I make sure they understand that the loan is completely done and I have all the documentation needed to close the loan. I do that on every single loan.
Yep. And that makes a world of difference a lot of
Which is
times.
not
That
what
can
happened,
be,
I think, on what you heard.
yeah,
Obviously that was
no,
not done.
that's not what happened with that particular buyer. But it does, I can tell you that it has meant the difference in my buyers winning the offer a lot of times, having the listing agent having that conversation with you. So,
Well, I think the important thing is also it's much less stressful. I
yep.
mean, especially if you're a first-time home buyer, the stressful items can be gathering your documentation. Imagine doing that when you're under a time clock.
Yeah.
So we always do that ahead of time. So I like it that when we go under contract, you're going to get insurance and you're going to have the appraisal come in and see, make sure that that comes in at value. So there are obviously strategies around that too, but those are the only things that you should really be stressing about in the home inspection. Other than that, everything else should be done in the loan and there's no stress while you're under contract. You're just getting ready to move.
Absolutely. And that's a perfect lead into item number 4, get pre-approved. So specifically, Nathan, this is a question that I get a lot. What is the difference between pre-qualified and pre-approved?
Pre-qualified is what happened to your person. Hey, I make this much money. This is what I do. These are my bills. Maybe they pull credit during a pre-qualification. Um, Virginia state law actually says that a pre-qualification is based on a verbal confirmation of what you make and how
Hmm.
much you have in assets. A pre-approval is verifying income and employment and verifying assets and running it through an underwriting to make sure that the loan works.
Right.
You're not going into underwriting like through my underwriting queue. We can do that on some tough deals. I do that ahead of time for some self-employed people that have a lot of stuff going on. But a pre-approval is income, assets, and employment are all verified and calculated and accurate.
Right. And it's not uncommon for a listing agent to specifically ask those questions when an offer is submitted. So,
Most good listing
buyers,
agents ask me, do you have all the I tell them, I
yes,
have all the documentation. Do you have their credit report? Do you have their
yes.
assets? Do you have their income? Yes, I have it all.
Absolutely. And the fifth thing in terms of getting mortgage ready, number 5, take a home buyer education class, which is what I was sitting in on. So Nathan, what are your what's your professional opinion about the home buyer education class, and is the class mandatory?
Uh, they're great. Fannie Mae and Freddie Mac have free home buyer education classes. You literally just have to Google Fannie Mae home buyer education class.
Mm-hmm.
Don't get sucked in the trap of the Google of paying for something like that. They're
Yep.
free. They're easy to find. They are mandatory when you use a Home Ready or Home Possible loan, and that's a first.
Mhm.
It's a loan that has low down payment alternatives, and it's for people who have, you know, 80% of the median income in the area. So it's required for them.
Mhm.
Um, but you don't have to have a first-time home buyer class for an FHA loan or a VA loan or anything like that. Some
Mhm.
of the grant programs, like Virginia has the Virginia Housing Program,
Yes.
Maryland has Maryland Mortgage Program, DC has DC Opens Doors. Those do require home buyer education. Also, it's those same courses typically, sometimes one or two more.
Mhm.
I will tell you that those courses are not going to give you the nuts and bolts of a loan and
Right.
how payment works and
Right.
how the total cost of the loan works. So I am amazed pretty consistently at some of these big places, big credit unions, for example. They generate a pre-approval letter, say you're approved, 400 or 500 grand. And I ask the client, like, well, how much is your payment on that property? Like, I don't
Right.
know, but they said I'm approved.
Right. That's important.
It is important because you're most likely always going to be approved for more than you're
Right.
comfortable paying.
Right.
So an FHA loan, conventional loans, they go up to 50% debt to income ratio. What does that mean? That means 50% of your pre-tax income can go towards all of your bills and your mortgage. A lot of people, I don't know how that leaves them enough money to drive to work, turn on the
Right.
lights, or go to dinner. So
Right.
it's important to start with that stuff first. And, you know, with all of my clients, I generate a summary, even if they're just looking around and don't have an address yet. I
Mhm.
want them to understand exactly what the mortgage transaction looks like. Here are the lender fees. Here's what a
Right.
typical title or settlement company looks like with their fees, title insurance. Here's what the transfer taxes and recording fees are for each locality. Here's setting up an escrow account. And an escrow account for people who are first-time home buyers, that's the account that the lender uses to pay your taxes and insurance on your behalf. And then also sort of all of the prepayment of interest and stuff like that. It's
Yep.
important to look at those line by line so you understand the mortgage transaction. I don't expect my clients to memorize that, but it will at least give them some familiarity with it, that as we go through the process, they remember that they learned about that or had asked about that, and they can ask another question to generate and
Right.
kind of understand the process more.
Absolutely. And I know when I do my buyer consultation, that's one of my questions I ask. What is your comfort zone in terms of where you want your payments to be? And when my buyer is ready to make an offer, I give you a call back and say, "Hey Nathan, this is the address, this is the price. Can you send over an updated cost breakdown? Because I want you to see if your offer is accepted based on what you want to offer. I want you to see exactly what your closing costs are and exactly what your mortgage payment is before you sign that offer and I submit it for it to be presented."
Yeah, I think it's important to eh, have a thorough understanding of the transaction. It's many times people's largest financial transaction. And
Absolutely.
unfortunately, they think about, I'm buying a $500,000 house. What they really need to think about is, here's my monthly payment, and what
Hmm.
is that in relation to my rent, and what kind of wealth is that going to cause for me in the future?
Absolutely. So, well, Nathan, we did it. We got through the 5 things. Item number 1 was check your credit. Number 2 was gather your documents. Number 3 was confirm your dates. Number 4 was get pre-approved. And number 5 is take a home buyer education class. So, do you have any other advice for people who are getting fall ready to buy a home for the holidays?
You know, just know your credit. Know your credit. Less debt is best. I think credit cards are evil. Um, I really do. I think that
Yeah.
people don't understand. There are people who take it to the extreme, like, I'm never going to have a credit card. You have to play the game, unfortunately. I
Yeah.
carry zero debt, but I put everything on my credit card and I pay it off every single month.
Yep. That's
And the
important.
mindset should always be never carry revolving debt. It's okay to have a car payment within means. I see people make 35 grand a year with $1,000 car payments.
Ooh,
That's
that's another live.
that's insane. But revolving debt is evil, and it really pushes people down and prevents home ownership. And if you pay
Mhm.
off your credit card every single month, you pay zero interest on that money, and you might get some perks and rewards.
Good
And
advice.
the other thing is, a really good loan officer is much better than a home buyer course. They're going to explain things, talk about how wealth is created owning a home, talk about the different loan programs, why a conventional loan may not be as good as an FHA loan for that person in particular. All sorts of things that go into this process that's important to understand. And when you work with an expert, they're doing all of that behind the scenes on their client's behalf.
Awesome. So now, Nathan, you are my lender partner in Northern Virginia. Anybody who's watching this, what is the best way for them to reach out to you if they have additional questions?
My phone number is 703-348-2166. You can text or call me there, 703-348-2166. And then also my website, Nathan Burch, BURCH.com. Very easy.
Awesome. Awesome. Well, Nathan, thank you so much for coming back. And I know that you'll be back again in the future. And thank you everyone for watching. If you're catching us on the replay, please feel free to post your comments and questions, and we will be sure to get back with you. Thanks, everyone, and we'll see you next time.